Alright, what's up, you guys? This is a recap of the first week of April, April 5th through April 9th. Tomorrow, Friday, is Good Friday, and the markets are closed, so it was a short week. Um, let's go ahead and recap what happened this week. Let's see here. Okay, so Friday, last week. So this was last week. Okay. This was Monday, Tuesday, Wednesday, Thursday, Friday. So Friday of last week, it ended like this. It was selling all day long, and then people were covering towards the end of Friday. So typically, when you see a sell-off like this, as a momentum trader, you would expect that the following Monday would be an even bigger drop, and you would see more selling because of the weakness. However, this week was unique because that didn't happen. There was something that happened over the weekend that forced the markets to start buying. So what happened was, typically, Andrew Cuomo, the mayor of New York, usually announces a number of new coronavirus cases and deaths in the morning, right when the market opens. But he announced early on Sunday and announced that there were fewer cases of coronavirus and fewer deaths. So the market took that as an indication that New York has reached its peak, and then it's going to start tapering off, and everything's going to get better. So on Monday, um, the market looked like this. So we went from down here, and it ripped all the way up, and then this was Sunday morning is when the market opens, and this is when Andrew Cuomo, the mayor of New York, started talking, and people got excited, thinking, "Oh, this is it! We're at the peak. It's going to start tapering off. Everything's going to get better." So instead of going down and gapping down and then buying to cover and then chopping sideways, this week the market did the exact opposite of what I said in the email. So in the email I said it was going to gap down and then chop sideways for the rest of the week. Well, this time it gapped up on news, and then it squeezed a whole bunch of people for tremendous losses, myself included. I had, my second biggest loss of my career on Monday. So this is what it looked like right here. I was short down here. I shorted into weakness on Friday afternoon, and then it gapped up on me, and it kept going. So that was my second biggest loss of my trading career. But like I said in my last email, I only put 10 to 20% of my account in every trade, because if I lose 10 to 20%, I still have 80% left to trade with. I can make my money back, rather than going 100%, losing everything, and then you're just blown out. So that's what happened to some people this week. People got blown out. They are no longer trading because they lost all of their money. This guy right here on Monday, he lost $1.8 million. Negative $1.8 million. That's crazy. This is why you don't trade big. You got to manage your trades. But yeah, so this is my Twitter account, JollerH. So if you want to follow me on Twitter, that's cool too. But yeah, crazy. He lost $1.8 million on Monday, and there's nothing you can do. But again, you just have to manage your trading account. You manage your trades based on your risk tolerance. Okay, so as a momentum trader, what you want to do is, when something is strong like this, you want to buy into strength and you want to short into weakness. Because when you buy into strength like this, it's been up all day, it's stayed strong, So here I actually bought. I bought SPY calls. And so as a momentum trader, you want this to continue going up, right? Because it's strong, people see it, and then they're all, okay, it's strong, so I'm gonna buy too. So the next day they start buying, right? So this is what happened. So I bought, and then it gapped up, and it kept going, right? So this one, it kind of failed, but I took profits here. But this is exactly what you want happening as a momentum trader. You buy into strength, and then you sell it for profit. So these are people who are selling for profit. So you buy here, you sell it up here, and then you wait for the next opportunity. And then this sold off again. So here, this week, in the email I said it was going to be a sideways chop the rest of the week, right? And not to participate if you want to part with your money. Well, in this market, it just flips on you really quick. You see that? You see how, like a roller coaster. So you don't want to participate in this. People who are playing are going to lose their money, right? So here, what do you think is going to happen? You think it's going to go down? So again, a momentum trader, you buy it here and you expect it to continue higher because it held strong all day long, right? So let's see what happened. There it is. You buy and then you sell. You sell for a profit right there, right? And then held. So what do we do now? So Monday, when the market's open, this is strong, it could continue higher. That's momentum trading. But in this market, oh my God, okay, so after this Monday, and then sideways for the rest of the week, and then ended up higher. So momentum trading, I would say on Monday, this thing's going even higher. But yeah, I mean that's basically how you swing trade stocks. You just go with the momentum. You don't try to guess. You don't try to guess one of these moves. You don't guess like, oh, it's down, it's weak, I'm gonna buy, and then boom, you're right. You see, a lot of people didn't expect this move. CNBC all week long was saying, even Donald Trump said that next week is going to be one of the worst weeks in the markets. It's going to be one of the bloodiest. And so I guess everybody was shorting, and everybody got taken for their money. Right here, you see how there's no selling off going on? A lot of people didn't buy here. That's why you don't see a lot of selling in the beginning. And here, it's a big pop, which means a lot of people here were short. When the market opened, oh my God, I'm down so much money, I have to cover. And then boom, everyone gets out, they cover for a loss, and then the momentum carries it forward. That's basic trading right there. Wow. So yeah, this week, I suffered huge losses, but I still have 80% of my account, and I am confident that I'll make it back over time. It's going to take me a while to make it back, but I'm confident that I will, because I know how to trade these things. But for some people who aren't experienced in this, buying on strength, and then selling, sometimes, oh, I'm just going to hold it because I'm going to make more money if I hold longer. Well, it went right back to where you bought it, and then they sell, and then all of a sudden right back up to where it was. So it's like this market will take your money. They took everybody's money. So today, like here, people bought, right, on strength. You sell it up here, right? But here they got lucky, because right here is when the Fed announced 2.3 trillion additional stimulus on top of the 2.2 trillion they announced last week. So now they're pumping $4.5 trillion into the economy. So with that, I think it's going to keep continuing higher, even though I am still overall bearish on this economy. Why? Because there is no vaccine, and people are still dying, and the cases are still continuing. People are going to be afraid to go back out to work. They're going to be more cautious, but people are still going to be kind of freaked out, right? And we don't know what effects this has on the economy. A lot of people are out of work. A lot of 6 million people unemployed. They applied for unemployment insurance. So without people working, this economy will still continue to go down. A lot of people are going to be struggling to find ways to pay their bills, their rents, all that stuff. It's still a work in progress, and nobody really knows what to do. But yeah, so these lines here, Fibonacci retracement. So what you do is you take, here, let me delete this, remove drawing. Alright, so Fibonacci retracements. So Fibonacci retracements is where you take the high, 39.38, and you draw a line from the top, and you go all the way down to the bottom, 21.1775. Oops, right there. Okay, so when you have the top and the bottom, you can see where traders are going to enter and exit, because this is based on fear and greed. You kind of have an idea of where people are going to start selling and buying based on these price levels. Okay, people have a risk tolerance of 23.6% before they start thinking about something, and then 38% is like, okay, I'm losing money, or I'm making money and so I should sell, or I'm losing money, I better get out, right? And so this is the tolerance levels. When you get up to this point, it's like, okay, I'm out of here, right? So 50%, 61% is where people will start to reshort this downward market. See how it's falling? It's a bear market right now. So here people have tolerance, they're holding, and then when they get up to here, 38% is like, oh my god, I'm losing money, I need to sell. So here we go, we're selling, right? And then people get confident because of this, so they're buying, and then again people are selling when you hit these levels. You see, all I did was draw the Fibonacci retracement from here to here, and you can already see where the chart is bouncing up and down. You see, after it broke this level, it hits the 50%, and it's kind of hanging around. That's where we ended. So Monday, it could potentially sell off a little bit, maybe up to here, and then go back up higher, and then next week it probably could hit 61.8%, so 292. We could probably continue this. I think, because I'm bearish, that this will come selling down, and then it'll chop around and then start fading again. That is what I'm hoping for. Alright, so with that, what am I playing? Okay, so what am I playing? I am playing win. I am playing win short. I am short because all the casinos are closed. Nobody's gambling. Everyone who's going to be gambling needs to touch these casino chips and spread germs. Nobody is going to be doing this. When the economy reopens, people are going to be very hesitant to re-enter into these casinos. I mean, 2 weeks ago I said I was long. I'm actually holding win stock. I have win stock, but I am short for the time being because of the current situation we're in. So here, this is my reasoning for being short. Okay, so I'm going to draw a trend line from the bottom, from the low point to the top, and I'm going to draw a trend line from here, from this top point to that top point. So this is what you call a bear flag. Okay, it's all the way down. This is the flag pole. It bounces up here, it stops, sells off, stops, and then it bounces up here again and stops. And what I'm hoping for is for this to come down to here, stop, go back up until this wedge completes. So it's going to go up, down, then it's going to keep tightening until it gets to about 65, and then you don't know where it's going to go. It can either scream higher, or it can tank all the way down to 30 bucks, $35 maybe. Wherever this was 35.84. That was the low point of this one. So yeah, 35.84. So that's what I'm expecting this to do. For next week, I expect this thing to fade all next week, and then bounce up to 70, and then fade down, and then hover around 65, and then I don't know where it goes. Okay, so this is basic trading. So if you guys have any questions, please email me. I'd rather do this rather than type up the email, because this way I can explain things easier, and I don't have to write a long email every Friday. All right, so that's pretty much it. In this market, what you want to look for while trading is strength, relative strength, and the MACD. These are studies that I like to use. When this blue line crosses below this yellow line, then that's when you want to start selling, right? So you buy down here where it's starting to turn up, where the blue line crosses over the yellow. Right here you buy, and then you sell when that blue line crosses down below the yellow right here. So this would have been a $35 per share gain. So you would have in fact doubled your money if you had played the MACD study. You see how our relative strength index shows overbought, oversold strength. So here it's oversold, here it's saying oversold. Right here, when you get to this line, you're overbought, and traders like to sell it when it gets up to here, and they like to buy it when it's down here. So but here, I mean, you're buying and it's hovering, and then it's oversold. So sometimes it doesn't work, but you just kind of have to trust the chart pattern at this point. But yeah, let me know if you have any questions. Just email me. So I'll just do a video every week rather than sending an email. All right. So that's it for you guys who are long-term investors. Oxy, this one's owned by Warren Buffett. Warren Buffett and Carl Icahn are also is a director of this company. So this one I'm actually long. I'm long this stock. I'm hoping it gets up to $20. This is one of the biggest oil producers in the world, and they pay a high dividend. Warren Buffett owns it, so I like it. Okay, I'm pretty confident it's going to get back up to $30 a share, even $40 a share when this is all said and done. Okay, this is where it was before we got shut down. Then it faded, hovered around, and dumped, and now it's dirt cheap. $9 was the low. One of you have actually took this at around 11, which was I thought was expensive, but it almost doubled for you. So now I'm long because it's reaching the top of this long channel. You see how it's like a long L shape here? This is a long L-shaped recovery, and then once it breaks above this line here and it hangs out, it's going higher. So if there's like super good news in the oil markets, this thing could rip right back up to 30, even 40. So if you're willing to wait this one out, I would recommend putting this in the retirement account, because when people go back to work, they're going to need gasoline and they're going to need oil. So look, this thing, let's see how this thing performed over the past, I don't know, 15 years. Yeah, this thing hangs out at $80 to $100. Oh, maybe more like $60 to $80. This is where this thing belongs. Okay, we're at $15. We're at $15. You can triple your money. Okay, so if you're willing to wait this thing out for 4 or 5 years, this thing will triple. All right, so that's it. I know I said this like 3 times, but that is it. All right. All right, you guys, see you next week.